Okay, thanks everybody for showing up. I'm Luke Kerner, and I'm a partner at Blockchain Coinvestors. We're a crypto fund-to-fund, invested in 25 of the leading crypto VCs around the world. And I'm here today. I've got a presentation called 10 Thoughts on Crypto and DeFi. And I'll go through the presentation, and afterwards, hopefully we'll have some time left over for Q&A. So, real quick, my crypto origin story, I was a Wall Street analyst for the first part of my career. The second company I ran was called Bolt. It was an early social network. We were the largest social network in the world before MySpace. I did 8 acquisitions while I was at Bolt. Talked to more than 100 kids. Generally, they were companies run by 16 to 20-year-old kids. And I was the first person during that period to call Zuckerberg about a month after he launched Facebook and offer to buy the company. Obviously, I did not. Fast forward from there, I became an angel investor, and investing in companies like Facebook, actually, when they were still private. Became a VC in 2012, investing in social media-related companies like Meetup. Actually started Meetup. It's kind of magical. The people you want to show up automatically show up. And while I was a VC, during that time, I became of the view that Famgo, what I call Famgo, Facebook, Apple, Microsoft, Google, and Amazon, was creating a problem. And I wrote a post in April of 2017 called titled "The Profound Implications of 5 Increasingly Dominant Tech Companies." And the basic premise was that they were hoovering up the majority of the value creation in tech, and that was great if you were a shareholder and employee of Famgo, but for the rest of the world, it was not good. It was really harming innovation. And I, actually ended the story in April of 17 with this chart, and that my hope was, I didn't see anything on the horizon that was going to challenge Famgo. But if you take a look, and what this chart is, this is a chart of market cap, market share of the top 100 tech companies. So in 1980, IBM dominated tech with about 75% of all market cap of the top 100 top 100 tech companies. And then as we transitioned from from the mainframe to desktop, Microsoft became the dominant tech company via market cap, and they peaked at about 30%. And then as we transitioned from desktop to mobile, Apple became the leading company in terms of market cap. And what this chart teaches me is that nothing is constant but change. And so this was, again, published in April of 2017. Come June 29th, 2017, a couple months later, I held a conference call when ICOs were going crazy with 4 super smart people. I had spent about a year, 2013, 14, going down the rabbit hole long enough. I joked that the Wall Street Journal quoted me in a story on Bitcoin in 2013 as Wall Street's Bitcoin expert. And I looked at it for a year, but I didn't see it. And on this call on June 29th, 2017, somebody said something, and I actually saw the crypto light and became of the belief at that time that crypto was the biggest thing to happen in the history of humanity. That said, I still didn't exactly know what it was. Have been an active blogger for more than 10 years. And so I started writing little blog posts, and I joked that, I don't know what I think of anything until I read what I've written about it. And so I wrote little blog posts for about 3 months. And then in October of 17, I kind of put together my first thought piece titled 7 Thoughts on Crypto After 3 Months Down the Rabbit Hole. And I didn't know it at the time when I published it, but I published this on Medium. Medium actually tracks what they call the most influential bloggers across more than 100 different categories. This thought piece was the most read piece on crypto for 3 days, after which on Medium, they ranked me as the 3rd most influential crypto blogger in the world, which actually proved the first of my 10 thoughts that I'm going to share with you, and 7 thoughts from this article. And that nobody knows anything. It's my belief, again, that this is the biggest thing to happen in the history of humanity, but we're at the very beginning and nobody knows anything. It's important to define what crypto is. When we're in any new industry, nomenclature is a problem. We use words that mean different things, the same word that means different things to different people. To me, crypto is a series of technologies: blockchain, cryptocurrency, smart contracts, zero knowledge proof, that in combination are enabling new ways of doing things, most notably decentralization, which is powered by community. And so, those are really my next thoughts. First is that decentralization, I believe, is the foundational element of crypto, and that community is what powers decentralization. And what do I mean by powers decentralization? Well, if you think about, electricity is really what powered the second industrial revolution. In the early days, companies that leveraged electricity actually all built their own power generators, and it took a lot of years before huge generators were built that everybody could plug into. And now community is powering the fourth decentralized industrial revolution. And we're in that early day period now where everybody, again, is building up their own community. But over time, we'll have big communities that people can plug into. And to some degree, that's what I started with Crypto Mondays, which is one of the largest crypto meetups in the world. We have chapters in 60 cities around the world, and I see this as a community that other communities can plug into and leverage, and we're completely decentralized. And what is a decentralized community? Just again, so we're talking about the same thing. I see it as a group of people with a common interest in an agreed upon governance system. And when communities work, all members get more value from the community than they contribute. And so it's really kind of magical. And when I think of giving value to community members, we call that token economics. It can be money that you get from people. In Bitcoin's case, for protecting the network, you can get a Bitcoin, and obviously miners spend less money to get a Bitcoin than on average they make. So again, that's the token economics for Bitcoin. What's interesting, when I was running Bolt, this early social network, we tried to give our users money to interact with advertising, but we couldn't make the economics work. And what we eventually found was that we could give status to our community members. We peaked at about 23 million members. 2 million of them would do anything for a badge that would scroll around their profile. And they would interact with advertising. And so it was a win for everybody. And there are other things like NFTs, that you can give as rewards. But the important thing to note here is that non-cash incentives are going to be a huge form of token economics. And we all think about how we give cash. Cash is great. But I think in the long run, it's non-cash incentives that are going to be the bigger part of token economics. And if you think about communities and how they scale, the communities, again, provide value, and there's a cost to providing that value. And so I think communities can scale to highly correlated to value delta, which is the difference between what it costs the community to produce what the members want and how much the community members value it at. And that's why if you think about the biggest communities in the world are where you have the most value delta, and those we call religions. And that's because what religions produce is faith. It doesn't cost them anything to produce it, and yet their members often value their faith more than they value their own life. And so as a community, as an industry, that's what we have to do, is come up with different ways to give value to our members that are less costly than what it costs us to produce. One of the things about communities, though, is it leads to tribalism. It leads to a lot of infighting, whether it's, Craig Wright, or now we have this whole fight over, ESG. And it's my belief that we're in the midst of a revolution. This is really a revolution. We're trying to change the way the world works. And the thing, and in revolutions, I think vitriol is a feature, not a bug. And that, that you got to recognize that revolutions are messy. if you think about revolutions, the Industrial Revolution ran from 1760 to 1840, and the big move there was, going from handmade to machine-made. Textiles was actually the first major industry to be disrupted by the Industrial Revolution. The third Industrial Revolution, also called the Digital Revolution, when we went from analog to digital, and then to the World Wide Web. And in that instance, print was really the first industry to be disrupted. And now, we're in the in the crypto revolution, in the fourth revolution, decentralized revolution, and finance via DeFi is really the first industry that's being disrupted in the decentralized revolution. And if you think about, how big is this going to be? How big is DeFi going to be? We look at total value locked as one measure, and it goes up and it goes down. Where's it going to be in 5 or 10 years? It's hard to know, but I'm a huge believer in Amare's law. And Amare says Amare was a professor at Stanford in the 70s. He was also the chairman of the Institute of the Future, Roy Amara, and he said something that's very true. So we tend to overestimate the effect of brand new technologies in the short run and underestimate it in the long run. And that's where you get bubbles, because people get all excited and then it doesn't grow as fast and then it crashes. And then, fast forward 20 years and it's bigger than anybody ever imagined it. And that's the way that everything works. And I think that's the way that crypto and DeFi is going to work. And if you think about the moment that we're in today, to me, it feels very much like this is a picture in a museum in Denver, a mural of the Cambrian Explosion. And it was a period in time, a little over 500 million years ago, when there was an explosion of new life forms. And I think that's what we're seeing in crypto and in DeFi, is we're seeing this explosion of brand new things appearing, brand new ways of doing things that could never have been done before. And I think that DeFi is in its Cambrian period, and most of these entities that are starting up are going to die out, but those that survive are going to be truly epic. And if you think about how high can Bitcoin go, I have a 10-year, $1 million price target on it. And I've written, multiple blog posts about how I got there, but that is my outlook. And so I really don't care. And I'm pretty sure I know how it's going to get from here to there. It's going to go like that. And if we're here in 10 years, all of this is just noise. So, I encourage people to recognize that this is noise, and to really, spend as much time as you can, figuring out how you can participate in where we're going to be in 10 years and worry less about the noise. And if you take a look at where Famgo, has gone today, so, it was at 40.2% when I published my first post on Famgo. I've written many posts on Famgo now. This is 2017. This morning, we were at 49.9% of the total market cap of the NASDAQ 100 is made up of Famgo, those 5 things. And that means that they, over the last 6.5 years, Famgo has captured about 57% of all market cap, of the top 100 tech companies. And so these, really monopolies are just growing bigger and bigger and bigger. And so, I think Bitcoin is, going to be $1 million in 10 years, or, at least $1 million in 10 years. But today, looking at where we're going, I think it's safe to say that it's still very early. And that's really, I think, the most important thing that I try and help people who are new, because, this is a great tweet from 2011. I wish I had kept my Bitcoin, at 6 cents, and, that he bought at 6 cents and selling them at 30 cents. They're $8 now. And, I think that everybody since Satoshi who has gotten into Bitcoin thinks that they're late. And I think people today, newbies can come in. I hang out a lot in clubhouse rooms, and one of the questions I get asked most often, is it over? Does it have any more left to run? And in my view, in crypto, we're still really at the very beginning. I think the best analogy to crypto is, again, is the internet. And I think it's like 1993 internet. It's still so hard to use crypto for the vast majority of people, just like it was so hard to use the internet in 1993 before Netscape introduced the browser. And it became incredibly easy for people to go around the web. And so to some degree, that's what I'm waiting for is our browser moment in crypto, when all of a sudden something happens and becomes very easy for people to use, right? None of us, read a manual about how to use our mobile phone. None of us even know how it works. So this idea that we have to educate people about crypto, I'm a big believer in educating people about crypto, but I think we go mainstream when we don't have to educate people about crypto. But today, obviously, we're not mainstream, and today it's still very, very early, and it's incredibly exciting to be, a part of this remarkable industry, crypto and DeFi, and that's the end of my talk.